Welcome, everybody. We have an exciting panel here today for you all. Brief introduction about myself. Rilwan Meeran. I'm heading up ASA's Impact Investing Initiative. At this event in 2022, we launched a $125 million impact initiative to invest both in funds and to do private direct investments into companies. We're fortunate enough to be an investor of a few of the funds on this panel. Also, we launched a new investing initiative last week, $25 million to support emerging managers of funds, minority entrepreneurs, and early stage companies. So that's some positive news. As you all know, in the current environment, it's been immensely difficult for startups to raise capital. Across all sectors, healthcare, manufacturing, there's been a 35% drop in funding for startups. On the education technology side, that drop has been much more precipitous since the pandemic, where funding has dropped by more than 50%. Companies that are raising their seed and Series A with $2 million or less in revenue are struggling the greatest in raising capital in these economic times. But to stop the doom and gloom statistics, with any downturn, there's an immense amount of innovation that occurs. And with that, it's an exciting time to be investing in technology, education technology companies, as many folks are integrating artificial intelligence, virtual reality, and so forth. So there's a chance for these companies to scale really quickly. On this panel, every one of these panelists has capital or is creating new solutions for these companies to scale. I'm going to let the panelists introduce each of themselves and tell you about their exciting firms and why they're poised to win, and they're actually funding great companies. Deborah, we're going to start with you. If you could, give us your thoughts on the current market, positives and negatives of investing in career-focused early technology companies on the education side, and why GSV is poised to win.
We're not trying to win. We're trying to have the sector win. How about that? I think and I think my partners here up on stage share that conviction and that mission in terms of transforming, including you, of course, Ron, transforming the education sector pre-K to gray, which of course includes the workforce. Yeah, it's a really tough environment. It's a tough environment here. We do about 50-50 investing in the U.S. and India, and it's a tough environment in India. So it's not, it's not unique to the U.S. market. It's also true that, of course, post-pandemic, the spike in ed tech financing was unprecedented, and it actually, the curve exceeded some other sectors. So the precipitous fall on the way down has been exacerbated by the numbers having gone up so enormously during the pandemic. I think we do as a pre-K to gray education technology investing globally, early stage all the way through growth stage, although we were very much focused on early stage today. I do think we've lost a little of a few of the generalist investors. There was a lot of generalist investor interest in the ed tech sector during the pandemic rush, and I think we probably have lost a lot of those folks, and we could probably even see it in our attendance numbers. We haven't looked at it yet for ASU+GSV, but my guess is that we have fewer generalist investors attending here this week than we had in the prior 3 years, probably. But that'll come back. It'll come back. That's always happens with generalists. They leave, then all of us are here still defending the sector and trying to help make it work, and then they come back when something like Duolingo pops and is an extraordinary success. So I think that we're at an interesting moment. You're right. I mean, I think some of the greatest companies in the world, including Apple and others, are created in market downturns. What's interesting, I'll just hush up after this, the other interesting thing about the education sector, and it's really not so much in the workforce as it is in K-12, what we don't see is the enormous success of later stage digital education companies. They're probably 10, 15, multi-billion dollar private equity backed digital K-12 companies. 10 years ago, people thought you'd have to be a lunatic to invest in K-12 education. And it's been a wildly successful investment category, which I think gets often overlooked. And so hopefully that carries through too to the workforce. But anyway, I'll stop there. But.
Thank you, Deborah. We're going to switch a little bit. Jessica of Strada. Strada is a peer of ASA's, and you're a funder of both funds and direct private companies. We'd love to hear what Strada is focused on and how you're seeing the market.
So, as Rilwan said, Strada is an operating foundation. We're focused on strengthening connections between post-secondary education and training and employment, and doing that in a number of different ways. So as a foundation, we have the lever of grant making, we do research, we focus on policy and advocacy work, and also strategic investments, and that's the area that I am responsible for. In strategic investments, we have the great pleasure of being able to invest multi-stage and also being able to invest, as Rilwan mentioned, both direct and in fund managers. And this just gives us a fantastic vantage point to really see what works for later stage at the very earliest stage. I have the privilege of being able to be on a board of a private equity-backed company that I can really kind of understand what are some of the dynamics at that stage. And then also, we're investors in a venture studio and the Techstars Workforce Development Accelerator. So we're really also seeing what is the promise for companies at the very earliest stages. I think as Deborah had mentioned, like the past several years, there was a lot of tourist capital, a lot of folks that were sort of coming in, getting really excited about unrealistic multiples that have fizzled. And, now I think we're kind of back to basics, which is really refreshing, having been in this ed tech, online higher education space for 22 years. It's really refreshing to actually see that there are folks that are really focused more on the fundamentals. And the fundamentals that we think about as impact investors are, what is the problem that you're trying to solve? And is this a really critical problem that not just buyers are going to buy, but that users are really going to use? We really think a lot about the utilization of that product. And I think that is what is going to determine whether something is efficacious, and that's one of the critical things that we're looking at as an impact investor. And then also whether something has the ability to really grow and gain scale. Because if you're selling a product, but people are not actually using it, then you're really doing a disservice to the field at large.
Thank you, Jessica. Jomayra, increasingly all across the media, employers are continually asking for skills-based workers, right? And colleges and universities are increasingly being asked, how are you preparing the youth to enter the workforce? A lot of kids, as you know, are not going to college, and they want post-secondary training to get the skills and enter the workforce as if somebody went to college and they didn't go to college. Love to hear what you're seeing in terms of the companies you're supporting that is helping to bridge that gap between curriculum and real-world experience.
Absolutely. So I'm Jomayra. I'm a partner at Reach Capital. We are an early stage venture fund focused on education and the future of work. And this particular area is one we've spent a lot of time thinking about, particularly in sectors where we see there is an acute pain point around supply and demand imbalances. And so one of our portfolio companies, for example, is a company called Stepful, which is focused on training and placing folks in the allied healthcare workforce. So we're talking medical assistants, phlebotomists, pharmacy technicians, areas where there's huge pain points for health systems and providers around finding supply, and there is a lot of unmet demand. And so what Stepful does is they work outside of traditional college systems. You can, as a consumer, go and do their program, which is primarily online, and for a relatively low cost, and get access to a pretty meaningful career with a lot of upward mobility. And so the company started fully consumer and is now launching their B2B offering so that they can shift some of that cost to employers who already have that that pain point. And we've seen this in other sectors as well. There are companies that are doing this across manufacturing and, again, places where you see large supply and labor demand imbalances. And so we think there is huge potential to disrupt some of these more traditional education systems that actually provide skills-based learning.
Great. Thank you, Jomayra. Just to follow on that, Deborah, increasingly employers are frustrated. They're not getting the talent and the applicant pool they need to do those jobs. We'd love to hear from you what you're seeing in the space of what companies are actually getting it right, as well as if you could highlight apprenticeships, which is increasingly becoming popular in this country.
Yeah, I mean, I think employers are, very anxious to align their sort of skills requirements with their skills inventory in their employee base. And, we're an investor in Guild Education, as you guys know, and as Rilwan knows. And Guild's interesting because they're going into companies. I mean, they're providing services, SaaS offering into companies to allow those companies like Walmart, like Target, like Walt Disney, like others, to take their existing employee base and re-educate them for other jobs. And so a little bit what Jomayra said about healthcare, so you see at Walmart or you see it in other places where there are massive shortages in the pharmacy technician area. And so they're actually taking their existing employee base and retraining them to have the skills to be placed in an upwardly mobile job. And I think that's incredibly important. One of our theses for a while has been, employers as the fourth education system. We think it's critical that employers become the fourth education system because the downstream systems, as we all know, are failing to some degree. And AI has made it more complicated. So I think we're all going to need to be retrained. I listened to Reid Hoffman this morning talking about it. It was fascinating. But yeah, I think you have some really notable large employers like Walmart, like Target, like Disney, others who have been out there, JP Morgan, et cetera, who have gotten out there aggressively in terms of creating skills alignment and then also getting, upskilling and reskilling their existing employee bases, as well as folks who are coming, in through new employee bases. So I think it's a really interesting moment. We hope it gives a real lift to the workforce sector, and that we see more and more opportunities to invest there.
Great, and thank you, Deborah.
Rilwan, you mind if I hop in on that, even though I've got my
please go ahead.
intro? I'm Henry Hips. I'll give the intro in a second, but just to follow up on the apprenticeship point, also a key trend to acknowledge and reflect on is that the federal government is playing a significant role in actually supporting the growth of apprenticeship. So we don't have the same infrastructure with industrial guilds like you would see in other countries like Switzerland or Germany, but the federal government is making a significant bet at this moment in time where there's an acknowledgement that there are a bunch of skilled jobs that do not require degrees, but apprenticeship is one particular opportunity to solve for that, and there's some structure in that. And so if you look inside from a policy standpoint, if you peel away the layers of the CHIPS Act and several other pieces of legislation, Department of Labor, NSF, they're pouring tons of money into apprenticeship programs that are sitting right next to all of the economic development drivers that they're investing in. So that's one key trend that is also contributing to seeing a much broader understanding of how apprenticeship can show up in the economy.
Which is funny too, because it's really just on-the-job training. Right. I mean, everybody loves putting this apprenticeship label, but it's basically the old-fashioned on-the-job training, right?
Well, it is. I think the one distinction, ideally, is that apprenticeships actually end up with a credential with labor market value, right? And that's a significant difference. Now, one point I think, Deborah, that you made, which I think is one of the things that has contributed to the lack of systemic change, is that there was an era when companies actually did assume responsibility for on-the-job training. There's a very different relationship between companies and employees. Employees stay on jobs longer for those reasons. We've seen really significant shifts in the labor market where, in some cases, employers have shirked their responsibility for training, and that's created some of the challenges. But now that we've got really acute shortages in access to talent, they're finally coming back to the table and willing to invest in and engage in alternative models for training over time.
Thank you, Henry. Appreciate it. A lot of people believe we need a systems change versus a white solution. And if we rely on CTE and Perkins, we're only going to touch the periphery of making a change. Henry, you've set up this innovative new venture studio model. Love to give us a detailed background of how you came to this new innovative proposal and what you hope to accomplish.
Yeah, no, I appreciate it. Again, my name is Henry Hips. Good morning. I'm the co-founder and CEO of Diffusion Venture Studio. So while I'd love to take credit for inventing the Venture Studio model, we did not. It's not new in the sense that it has existed in other sectors, and it's been quite successful in other sectors. We have a couple of examples in education where it's been successful. What the crew did with Entangled Ventures, which sold to Guild some time ago, was successful. But in short, for those less familiar with the model, it is a way to compress pre-seed investing and actual new venture creation by aligning human and financial capital in a little bit of a different way. The studio is not an incubator or a pre-seed fund. A studio is actually a co-founder. So the studio has the type of talent inside the studio to do opportunity identification, and in some cases, figure out what to launch based on things that its extended team knows and understands and begins to launch, and then bringing on an operating team when it's time to fully launch. In other cases, you actually wrap around an entrepreneur and provide some of the key experience and capabilities that a lot of early stage ed tech companies fail around, right? Like access to top flight chief technology officer, chief product officer, chief revenue officer, folks that deeply understand context on the education and workforce sides. Those are the pieces that hang up early stage entrepreneurs, because they often only have one slice of those. And it's difficult to then raise pre-seed capital to go fill in the gaps. So the Venture Studio model is really meant to de-risk and create a machine around how you identify opportunities to launch and then launch. In our case, we're taking all of those, and this is the novel part of our model, is that we are anchoring on R&D commercialization. So it's this idea that, like in most other sectors, R&D actually drives product and solution quality, which drives revenue. In our collective sectors, we have a ton of human and financial capital that goes into research that never actually makes its way into anything that scales, and a bunch of stuff that scales that has no evidence base. And so our thinking is that at inception, if you're able to blend together the types of skills that I mentioned, but also think about something that looks like a chief science officer role, where you're engaging really top flight applied researchers at universities around the world, that you can bridge this gap and align incentives and unlock both value and impact because of all that wasted money in R&D. So that's one of the ways to think about a structural change in our sector, and that's our approach to it.
Great. Thank you, Henry. Jomayra, Reach Capital recently closed their fourth fund in December of last year. You guys have backed a number of innovative companies in this space. We would love to hear about some of the companies you've backed and why you backed them, and some of the changes that are occurring.
Absolutely. So one small correction, December of 2 years ago. So not last year. No. I make the same mistake as well. It feels like time is flying. So I don't have any favorites because I love all of our companies equally, but some companies that we've invested in that are around kind of this, let's call it early career or economic mobility sector that we're really excited about and are taking innovative models. One is called Workwhile, so it's an on-demand labor marketplace for hourly wage workers. And one of the reasons we invested in the company is that it took a different approach to training that felt really aligned to immediate gains for the workers. And so the way the model works is you go on the platform, Workwhile, you're an hourly wage worker, you go on to get access to a shift that works for your schedule. And then you get pinged and you get a nudge that says, hey, would you like to be trained to be a forklift operator? It'll take you 2 to 3 hours. You can do it fully online, and we'll cover the cost. And the best thing is you'll get access to a shift that pays you $4 to $5 more an hour, which is very meaningful, in some cases 30% higher than they would be making without the certification. And so in one fell swoop, you go in on the platform, you do the training, you do it for free, and you stay on the platform to get access to the job. And you can immediately work within 4 to 5 hours in a job that's paying you more than you otherwise would have made. And so what we love about that model is that it's really integrating the education and the work in one platform. And so they've started with forklift operator training and are now expanding to other certifications that have similar models where it only takes a few hours, can be done very quickly and online, and they immediately get access to a shift. And so we're really excited about some innovative models like that. The other company that I'll mention that, again, is on this rethinking college and career is a company called Campus that we're investors in. And so they're rethinking community college from the ground up. And so their novel insight is there's all these amazing adjunct professors at universities like Harvard and Princeton, and many of them are barely making enough money to survive. And so Campus said, well, let's take this amazing talent, bring them online into our new accredited community college, give these students access to this incredible professor base. And most students are Pell eligible, so they don't really have to pay anything out of pocket. And they provide this great live online experience for students who many then go on to transfer on to four-year colleges. And so these are just some examples of the way that we see really innovative models unlocking opportunities at scale.
Thank you, Jomayra. No, that's really important, and that's really innovative. Keeping with the theme of innovation, you know, Henry, you've created this new innovative model. Why is it so important to disrupt the ecosystem? And how is real change going to disrupt a $6 trillion industry?
Yeah, I do think you have to think about it systemically and think about where the systemic levers are. So folks, I think, are disappointed with the pace of change, and it would be easy to blame our education infrastructure. And there's plenty of blame to go around. There's some challenges, and we can talk about those. I do think it's also important to think about the role, again, of employers as part of that system, right? So one of the fundamental issues with career education and career advancement is that there aren't a whole lot of common industry-wide accepted standards around what specific skills are for specific roles. And so even while we have some real interesting momentum around skills-based hiring, and some of the technology companies which have been on the, leading the charge on this, IBM, Dell, Amazon, all have wildly different perspectives on which technology certificates actually hold value and which credentials that are non-degree hold value. Mm-hmm. And it's not too difficult to kind of think about the challenges about the systemic challenges on the employer side, even by personal experience. So, like, by show of hands, how many folks have been through an annual review in their job where their mobility within the company, their rating, their salary, their bonus was all defined by some internally defined criteria that you were kind of like, who made a judgment about how this skill was attached to this assertion of this skill and who I am as an employee? How many folks just by raise a hand, like, how confusing is that? More folks should have raised their hand. Stop it. So if you think about how difficult that is on the employer side to get really clear, to draw a through line between, for this particular role, I can really clearly identify and measure what skills look like for this role type. Imagine then how much more difficult it is from the other side, from a career education standpoint, to define those skills and then actually confirm that you meet them to be eligible for that job in the first place. So for me, the connecting point and part of the systemic change is that technology is actually creating more opportunity, even on the employer side, to better understand how to define their own skills by role type. And as that begins to get more organized and more defined, then it'll be a lot easier to translate that to create clear pathways on the actual career education side. So there are interesting companies like Workera. I don't know if folks are familiar with Workera, what Kian is doing. They're using AI to like much more granularly pick apart skill levels on a much more like granular level to be able to both define what they are and match to, these folks are really strong in these areas and these folks aren't. But also that gives you pathways for learning, even within companies where folks are employed. So you can imagine as companies make that kind of progress, it won't be too hard for earlier stage companies to figure out how to translate that opportunity into all of the pathways before folks even get employed.
Can I?
Sorry. And Henry, I would say that like when the companies are able to disaggregate the jobs and they're able to more clearly articulate the skills, then there is kind of more promise for folks to be able to get internships and apprenticeships because you're now creating more visibility into what actually needs to get done to do a job, as opposed to this black box that's really unwieldy and confusing.
That's right.
And I think has become one of the impediments to early career potential. So they're not able to really see how to change the way that companies work in order to be able to accommodate some of these approaches.
I think that's right.
And I was hoping to get through the panel without mentioning AI, but I'm
going to do it next.
We've been talking about transitioning to a skills-based economy for a very long time. This is not a net new concept, but I will say, not to bring up the cliche, I do think AI, specifically advances in skills inference technology that has happened over the last few years, has now made this possible at scale. Right. You can actually infer skills from all the data that your employees are creating, and there are companies like Workera, companies like TechWolf, and a range of others that are working on this problem, and in my opinion, for the first time, doing it in a way that feels really real.
Well, 1,000%. I think the other thing that's fascinating about the generative AI, era that we've moved into, and I don't know if anybody, you heard Ethan Mollick this morning on Stage X or anything, but and just listening, Reid Hoffman speaking at lunch, and he's very poetic about this. The tech accessibility has just completely changed. They would make the argument that coders are the least able to work with AI. Because they have such a rigid mindset about how they code and how they develop, software and things, that actually it's the non-technical employees who have an opportunity, if they can get over, if they can become trained, if they can get over any sort of internal anxiety about AI, to actually become most facile with AI-assisted jobs. And so I think we've moved accessibility into a workforce concept, because I think we're just going to see, much more accessibility in technology jobs for non-technical people, which is awfully exciting, right?
Yeah, thank you, Deborah, and thank you all of you for that. So a lot of the people in this audience are founders of startups. And so they've come to this session to hear some great advice. So I'm going to ask one question I'd like each of you to answer. I'm going to start with you, Jessica. What is the one piece of advice you would give entrepreneurs on how to get funding in the current environment?
I think really do a lot of work on the problem that you're trying to solve. And have you lived that problem? Have you talked to people who live that problem? Are you talking to an echo chamber that's going to tell you what you want to hear? Or are you really talking to people who are not just telling you that they think it's really interesting, but that they're actually telling you that they would pay for it? I think we see that a lot with early stage companies, that they've got a pipeline of very interested buyers, but who's actually going to pay for it beyond the grant that funds the pilot? Who's going to really pay for it? And is that funding source going to be with you for the long term? So really sit with the problem, really make sure that if you haven't lived it personally, that you are building a team of people who have lived that problem, and talk to the people who are going to buy it, and truly listen, and don't just have the confirmation bias of thinking that you're hearing what they want you to say.
Jomayra?
So somewhat along the similar lines, something we talk a lot about at Reach is what is your earned secret about the market? And so what is the secret that you know that no one else knows because you've lived the problem, because you were the customer, you have had an experience with that problem. And the reason that that matters, especially in the age of AI, is that it is easier to build than ever before. And if you've actually hit on a real pain point where there is willingness to pay, there's going to be 100 companies behind you building around the same solution. So what is the unique insight and the earned secret that you have about the market that you're building in, and get really, really smart and refined on articulating that to investors and to your customers.
Henry?
Yeah, I think that's brilliant advice. To add to that, you have to actually do your research and deeply understand a given market, right? Like if you've begun to imagine what your solution is, and you've begun to imagine who your customer is, you need to understand cold who the existing competitors are, who the folks are that might be behind you, who are well situated, folks who are in adjacent spaces, who, if they just decided to move into your space, could take it over. And I think you have to understand some of the broader trends. So, like, if you're doing anything related to learning, you have to also understand how policy shapes markets. Policy shapes markets in a bunch of different ways, whether you're looking at early childhood, whether you're looking at K-12, post-secondary, future of work. Those are all different levels of agency. The federal government has roles, states have roles, local governments have roles. Those are all shaping what those markets look like. And if you're really good at seeing those trends, you can actually look at some of the policy and legislation and start to actually project where the market may be going, because not everybody else is paying attention to that policy. And I think that's really important to understand when you kind of think about skating where the puck is headed. Policy is telling you, in some cases, where the market is likely heading, because the policy is actually shifting the dollars.
Thank you, Henry. Deborah?
Yeah, I think that is unique to education and skills is this policy government angle, and where it can come whack you upside the head when you just least expected it. I mean, frankly, thinking through different sector, but the FAFSA debacle that's going on right now, and the implications that's going to have for higher ed and workforce providers. Universities are going to go out of business. You're not going to have as many buyers as you had before. You're going to have students. We're going to have dramatic plummeting numbers in terms of applications. We all suspect. So anyway, that is a uniqueness to education, that government, the role of government, positively and negatively, can have dramatic impacts in the sector, really across pre-K to grade. And you need to be looking around the corner. Nobody would have, frankly, anticipated this debacle, but I hope. But that's the kind of thing that can happen in highly regulated parts of the economy, which of course education is. I think right now we have a 5P model. It's hard to add to anything all these great folks said about how you think about it. We call people predictability, potential, purpose, and product, and purpose is the fifth one, and we do think it's critically important that you have a purpose in your company. Every company has a purpose. We're an impact fund like these guys, and so I think it's the same. I mean, we've been doing. I think nothing's changed. The market's changed, obviously. So you can't modify your shtick because the market's changed. You need to be looking at what the potential is for your product. You need to be thinking. Are people going to buy it? Can it get funded? And all that sort of thing. It's just the same. It's the same model. You've just got to be a lot more rigorous because it's just going to be a much higher bar. I mean, 3 years ago, idiots were hurling, and we certainly were an idiot at some point, hurling money at people with a business plan that didn't make any sense. And fortunately, we haven't had many of those. But it was a crazy environment. Money was just being hurled, and obviously everyone has tightened down, and entrepreneurs need to tighten down with it.
Thank you, Deborah. And just to follow on Jessica's point, I can't tell you how many companies that have come to ASA and they say we have product market fit, and they have like 2 or 3 customers, and then you dig deep and you find out they got those customers through friends and family, and actually they didn't actually really go out and get a true customer to pilot or take on this product. And so, be careful before you come to these investors. As we are, approaching the midway part of 2024, a lot of people are confused, right? The stock market is booming, right? But the private market funding faucet has really trickled. Love to hear from each of you. We're going to start with Jessica first about your thoughts on the market going forward and advice to entrepreneurs.
I mean, I continue to be really optimistic. I think that there's still some intractable problems that need to be solved. I think that those funders that are, those founders that are thinking about like problems in a more comprehensive way, like if they're thinking about funding sources and they're kind of looking beyond the typical funding sources, and maybe they're like thinking about access to WIOA dollars, and and I think that they're like, what we're seeing are entrepreneurs who are thinking a little bit more creatively about sources of funding to help them get things off the ground, as opposed to just like, employers are going to pay for this because this is a really important benefit for their employees. Well, it doesn't really work that way in 2024. So, but there are different sources for them to generate revenue.
Jomayra?
So we think in 10-year time horizons. And so I'm not thinking just this year or next year. The truth is the sector that we're focused on and we're operating in is a massive multi-trillion-dollar sector with huge problems that still need to be solved and minimal digital adoption. So there are massive opportunities to build in the space. That said, it is not 2021 anymore. And so the bar for getting funding is higher. And it should be, right? We care about business fundamentals. We care about seeing some signs of product market fit. We care about seeing some level of experimentation before giving investment dollars. And so I think, as we think about 2024, the truth is there's going to be capital for amazing solutions that are solving real problems. But I think that there will have to be some degree of creativity for some solutions. And the last thing I'll say is, and I think this is, it's not always as apparent as I think it should be, is venture capital is not the only bucket of funding, nor should it be, and it's actually not the right type of funding for 99% of businesses. And so being really thoughtful and creative about what are the other funding buckets you can tap into.
Great. Thank you, Jomayra. Henry?
Yeah, I definitely agree with both of those points. The one thing that I would add on why I remain bullish, I mean, when cycles happen and overall early stage VC is kind of gummed up a little bit because there aren't the exits that you would expect. But over time, thinking about 10-year horizons, my bet is that there's going to be a whole lot more money coming into the sector because there's likely to be a private equity-driven consolidation of a bunch of stuff. And you want to be in that mix. And if you want to be in that mix, you better get going now, because those platforms need to acquire stuff for growth. They need to acquire things to add feature sets to their platforms. So, I mean, we're just not in a sector where the wins are going to typically come from going public. But the VC market still, it's kind of the overall investing market catches a cold, and education investing kind of catches the flu, even though we're not typically in a place where folks go public. But I think that'll unpack itself over time. The one broader trend as to why I'm still optimistic about funding flowing to earlier stage solutions is that we're at this inflection point. We haven't spoken about it. I think all of us are living it and are tired of talking about it. We're not done with the pandemic, y'all. We're not done with it. If you're actually thinking about it in the context of the broader spectrum of learning, we are still in the beginning of understanding its broader impact on the young people who are in the K-12 system, the disruption of the pathways for the folks who are toward the end of that system into the post-secondary opportunities, and a broader segment of the population whose economic mobility wasn't great to start with and is now still not well. So you can make an assumption about whether or not the fabric of the country survives the current rifts, but one thing is for sure, folk need to get educated and then folk need employment, whether you're on the R side or the D side. And so while ESSER funds are drying up in K-12 and a lot of the stimulus money, if we are going to hold together as a country, which I'm hoping is a reasonable bet, there is still going to be a whole lot more funding that has to drive innovation to solve these yawning gaps in opportunity that we are only beginning to fully understand.
1,000%. I mean, I agree. And honest, and Johnny one note as me, but FAFSA is going to be the second wave of pandemic. I mean, we got another headwind into a sector of the economy that's less mobile, and suddenly, we'll see what happens. hope for the best. But yeah, I think it's just going to extend the malaise, I think, a bit, because we're having setbacks. Yeah, we have to be optimistic. That's our job. I'm probably too old to have a 10-year horizon, so I'll as the senior member, I think, up here, age-wise. But you have to be optimistic. The problems are enormous. They're enormous in K-12. They're enormous in higher education. They're enormous in the workforce, and they're all part of the same thing. It's just a continuum, right? And so I think we have to be as founders, as investors, as whatever. We have to be optimistic because we have to find solutions. To Henry's point, and those, and we need more successes in education. I think one of the big frustrations is here we are, over a decade into the ed tech revolution, whatever I'll call it, and we haven't made enough progress. So if you look at academic outcomes are down, they're not up, and that's you can pull out the pandemic even, and they were still down. So we got work to do. So I think when you have work to do, you need to stay optimistic and you need to get it done.
Well, thank you, Deborah. Really appreciate it. And that's it for everybody. So give a round of applause to our great panelists.